This is Capital Ideas TV. Coming up, the CEO of Glance Technologies muscling in on the mobile payments market. The head of Drone Delivery Canada charging toward commercialization. The CEO of Bee Vectoring Technology, a disruptive way to pollinate crops. And contributor Fabrice Taylor, how to read between the lines of sketchy news releases. Hello and welcome to Capital Ideas TV. I'm Mark Bunting. No matter where you are in the world, mobile payments are becoming the norm. From something simple like picking up a coffee to bigger purchases like buying a car, the smartphone is increasingly becoming the point of sale. That trend is expected to gather steam and radically change the way business is transacted in a big way. Just check out this forecast from the people at Statista. They anticipate mobile payment volumes will explode in the United States over the next few years. Transactions will total nearly $275 billion by 2021 in the U.S. alone. That would be a tenfold increase from 2016 and good for an average annual growth rate of 62%. If you think that's impressive, take a look what's happening in China. Last year, roughly $2.9 trillion worth of transactions were processed on the Alipay and WeChat mobile platforms. Clearly, mobile payments are the way of the future, and they aren't just about online shopping either. Analysts at Business Insider Intelligence predict mobile devices will be a staple of the brick-and-mortar shopping experience too. They see the value of in-store mobile payments in the U.S. ramping up to $500 billion by 2020. They credit improvements in mobile payment technology as the key driver of wider adoption. Glance Technologies sees massive potential in that meshing of in-store shopping and mobile payments. The company's Glance Pay app allows customers to pay for goods and services remotely without needing a store employee's help. It works like this. The customer snaps a picture of their bill using the Glance Pay app. Then they confirm the amount on the bill and add a tip or split the total with another user if they wish. Then the user finishes the transaction by tapping the Pay Bill button. The idea is to save customers time to improve their experience and save merchants time so they can handle more business. Glance Technologies may have started out in the restaurant business, but it's since expanded into niche markets such as cannabis and cryptocurrencies. CEO Desmond Griffin explains how these new offerings will help drive revenue growth for the company. Desmond, your first venture, Pay by Phone, was in the parking sector. It's a very distinct sector, and that company did well there. What about Glance Pay in the restaurant business, which is much bigger? You've got some bigger competitors, the likes of Apple, of course. So how do you stand out? How do you differentiate yourself?
That's a good question. Generally, I'm not afraid of big competitors. The bigger the competitor, usually the less nimble they are, and so provides an opportunity for us to innovate or out-innovate and out-move the bigger competitors. I also have a long track record of mobile payments, longer than Apple, believe it or not. And in terms of coming into this ready, our success on the fraud front, we've been fantastic on preventing fraud. And really eliminating over the last 10 months of our product's operation. Compare that to Apple, who had 6% fraud reported for the first few months of its operation. So I think there's innovation and experience and the ability to be nimble on our side. Let's
stick with fraud there, or more appropriately, anti-fraud. You say that your technology has essentially worked flawlessly. In a broad sense, how do you do that?
Yeah, well, if you look at mobile devices, it's really a convergence of technology. There's so much technology in a phone that we can take advantage of to help us vet and understand what's going on with new users and transactions. And so we use that technology to prevent fraudulent behavior. Which it's a much more rich environment for us to operate than, say, a traditional kind of web-based transaction on a PC. So we continually look at the technology in a phone and look at how we can apply it. And every year, more technology becomes available to us. Just look at this year with Apple coming out with the Face ID, the facial recognition. All these things can be applied to what we do.
You have a lot of new ventures on the go. One of them, Glance Merchant, and you want this to go viral. What have you done with this technology to make it simpler for merchants to use?
Good question. Well, if you look at traditionally, like our goal is to be able to let merchants get up and running quickly with a great payment solution that also offers a full suite of rewards and promotional capabilities and communication capabilities, really helping merchants build a relationship along with the transactions and providing intelligence around the transactions so they're faster, better, more efficient. One of the reasons we think we can, be successful with this new version is we don't require physical hardware for the merchant to get up and running. They can download it to their own device. And you compare that to even some of the people have done well, like Square. They've done a pretty good job of getting merchants on quickly and easily, but they still require physical hardware to solve the fraud problem. So you're still ordering, waiting, paying for, and waiting for physical hardware to come to swipe or be used in shipment payment scenarios for cards. Our system doesn't require that, and we've solved fraud in another way. So we think it can be very quickly and easily uploaded and used by merchants.
Something else you're working on, Desmond, is a cryptocurrency. You're going to create one. So how are you going to do that? How will it work? What's it backed by? And what will be the benefits for consumers and merchants?
Good question. So we've recently announced our foray into the cryptocurrency space. And really, looking around, we feel there's a real need and opportunity for rewards-based cryptocurrency. Rewards are something that we've been doing, I think, quite well in the mobile environment with our existing technology. And if you look at credit card companies and retailers, they've really established and proven out the whole rewards-based system or surrounding payments. And we believe there's an opportunity to use cryptocurrency to offer rewards and build it into the payment infrastructure that people use. And in fact, we're looking at potentially planning around, if you pay with a cryptocurrency, that can accumulate rewards through the usage of that. But outside of that, we're looking at allowing anyone who just pays with a traditional form of payment, like a credit card, to receive cryptocurrency-based rewards. And that can help spread the usage of cryptocurrency across the general population. Because to date, it's been fairly difficult for the average person to get involved with cryptocurrency. It's cryptic in some ways. And so we could make it easy and get them started and involved. And we think that that could be an opportunity to help spread what we're trying to do.
Last I saw, you've got more than $9 million in cash. So are you nicely cashed up now to pay for this build out? And you don't need to raise any money?
For sure. I mean, yeah, it's been great. This fall, a lot of funds have come our way, and so we're very well cashed up. Not to say that in the future we don't look at other funds to come in, but at this point we are requiring any funds.
Last question for you, Desmond. You've been public for 15, 16 months now. The stock has done exceedingly well. What do you think have been some of the factors? What have been the triggers for the markets to really get the story and to pile into the stock?
Well, I think, experienced management team, proven technology, in a number of really hot spaces, the convergence of technology into mobile phones, the explosion of mobile payments around the world. You look at what's happened in China. They've gone to almost completely, mobile payments across all their areas of payment, doing over $3 trillion a year in mobile payments. And seeing that, we believe too, it's starting to come over to North America where people are expecting to use their phones for all their payments. And then combining that with convergence of cryptocurrency, the explosion in that marketplace, it's gone up, over 1,300% in the last 12 months in terms of the size of the overall cryptocurrency market. It's over $250 billion right now and growing very quickly. And that whole area is one of the fastest growing areas of payments that's likely ever occurred. And as that continues, we're well positioned to help companies, merchants, consumers get involved and utilize these cryptocurrencies combined with our success in our secure technology. So I think that's what may be getting some people excited.
For many companies, we tell them that their data is like the Mona Lisa. It's incredibly valuable. Every large organization in the world right now has a 42% compounded annual growth in their data storage. And the old methods aren't going to work. Leonova's technology was built under the following assumption. All your investment in network technology and security technology and hardware, we assume it all fails and the bad guys are going to get access to your data. With Leonovas, we're the last line of defense.
If there's one emerging technology that's turning heads, mostly upwards, it's drones. Once a preoccupation of hobbyists, they're quickly becoming a very real possibility as the delivery system of the future. What's more, regulatory clearance is fast approaching, and that's why investors are herding into Drone Delivery Canada. The company is one of Canada's few publicly traded drone service operators, and it's making major strides in pre-commercial test flights. Its machines have successfully flown missions beyond the visual line of sight, laying the groundwork for an autonomous fleet of carriers. The drones have also grappled with rough weather and challenging geographies, and they've been up to the task. As a result, the partnerships have been flowing. Drone Delivery Canada has struck deals with an eclectic mix of clients, from plumbing suppliers to healthcare suppliers and more. That's led to an impressive run-up in the stock over the past 18 months. CEO Tony Benedetto discusses what his company is doing to scale up ahead of the regulatory approval expected for drone deliveries. Tony, you were in Moosonee recently along with your team, and you've got this deal with the Moose Cree First Nation. So explain what you were doing up there and the importance of this.
So we've been working with a variety of different communities. One of them is the Moose Cree First Nations, and working with the regulator Transport Canada, and they granted us a certificate to actually commence some test flights and start gathering some data as we look towards moving towards commercialization next year. And we assembled a group. About 9 of us went up, and we performed a lot of data gathering and some very successful test flights.
In a tough environment.
Very tough environment. We probably experienced 3 seasons in 4 hours in a day. We experienced 60-kilometer-an-hour winds in some cases, or gusts, extreme cold temperatures, snow, and with watching it, we actually saw the river freeze up in front of us. So very extreme climate.
A lot of news and events for Drone Delivery Canada recently. Another deal arrangement you have is with Wolseley, the big plumbing and heating company out of the UK with a big Canadian operation, and Texas supply chain management company. We interviewed the CEO several weeks ago. So what's the importance of those 2 deals?
As we continue to move forward towards commercializing our platform, we're looking to assemble the right kind of partners in different kind of verticals, whether we're talking about retailers or distributors such as a Wolseley, or healthcare providers such as Texas. It's really about finding key players in different niches of the market where we can bring our technology to fruition.
And these kinds of arrangements, let's say with Wolseley, are you planning on depot to depot or warehouse to warehouse? That's what they're looking to do?
They're looking to start in a depot to depot methodology. The starting point is going to be Northern Canada, and then slowly as we gather more data and execute missions, then we're going to start looking with the regulator, trying to move the technology closer to more of a suburban and then urbanized area after the fact.
Something else that you've been up to is going to the United States every now and then. You have a U.S. listing now, and an over-the-counter listing. So what's the importance of that, and what kind of reaction are you getting from U.S. investors?
So we started getting a lot of interaction based out of U.S. customers out of the U.S. And we said potentially there's a big market for us here. So we went to the U.S., started presenting our technology to the market just as an educational process. And we had very strong acceptance. There's no selling. There's a buy-in. They understand that this technology is coming. And whether we're talking about funds or high net worth or retail type investors, there's a very strong appetite. So we're slowly developing this market and just putting more eyeballs on the company.
So you have first mover advantage in Canada. Do you have the same thing in the US, or are there similar companies to you there?
We have a very unique solution both in Canada and the US. Our strategy has always been focused on the software and the systems versus the hardware. And what we're slowly starting to see is that we have a real advantage in North America, if not globally, based on the technology we've been able to assemble and test within the Canadian geography.
You recently raised about $15 million. What are you going to use that for?
So part of the $50 million is really to assemble a small testing team to explore opportunities outside of Canada. One of the markets is the US. The market, we believe, is the right place to go, and simply take our technology and just execute it in a different geography.
Now, our viewers and subscribers have been following Drone Delivery Canada's journey since, well, going back to last year when we first talked. We had a cover story on you guys in the Digest. We were in episode 4, I think it was. Here you are again.
Yes.
So keep the journey going. When is commercialization? You're on track?
So our goal is to obtain our compliance status operator certificate by Transport Canada this year. That's the goal we have. And then move towards commercial pilot for next, and then commence layering in commercialization from there. So It's very close on the horizon. We're very confident of that we're doing the right things to get to where we need to be. And to date, we've hit every one of our milestones, and we look forward to hitting everyone else going forward.
In 35 years, I've been involved in several successful mining startups, yet this is the best pre-production project I've ever been involved in. Our company has a current market cap of about $30 million. Our preliminary economic assessment shows that we have a net present value on the one project of $210 million, and I think that represents a real opportunity for investors to make some money. In mining, timing is everything, and we're in a zinc cycle right now, and we see that continuing for several years from now.
It may be hard to imagine, but these tiny winged insects are worth more than $30 billion each year. Bees pollinate roughly 70 of the top 100 crops we grow. Without them, our agricultural industry would struggle to sustain itself. And yet that very same industry kills them by using harmful pesticides. Bee vectoring technology is looking to harness the power of bees and protect them at the same time. The company has designed an organic pesticide that kills harmful insects, but is harmless to both bees and humans. The powder is stored in trays in an artificial beehive. When the bees enter, they become covered in it. They distribute this organic pesticide when they return to the fields to pollinate crops. The entire process is completely natural to the bee and does not disrupt their natural ecosystem. Bee vectoring technology is perfecting this science and is now ramping up into commercialization. It's just signed its first revenue-generating sales deal and is looking to add more to its books. CEO Ashish Malik explains how he's looking to build upon this recent success. Now, I've seen this beehive. Could you tell me how it works from start to finish?
Sure. So we have two different systems. We have one system that works with bumblebees. We have a second system that we're still working on, that's still in the development stage, that works with honeybees. The common element of both these systems is that we have a dispensing technology that works within the commercial beehive, and through this dispensing technology, when the bees are leaving the hive, they actually walk through a tray and pick up some of this beneficial plant treatment agent. It's a beneficial fungus, and they carry that with them on their bodies as they go visit the flowers, because that's their food source, right? So they carry this system from the beehive to the flowering crop.
You've been working on this for a lot of years, and you're developing it, perfecting it. So tell us about your results based on your research and why it's a superior technology to what's being done now. And obviously, one of your ultimate goals is to help farmers increase their yields and for it to be more sustainable and environmentally friendly.
So the idea about using bees to vector or deliver biological treatments has been around for several decades, actually. Technology came out of the University of Guelph, but what we've now been working on is a commercially viable solution for that concept. So we've been testing for the last 3 or 4 years using replicated studies. So we work with reputable third-party researchers, university researchers, other contract researchers, and we've worked in the US, we've worked in Mexico, in Canada, in Italy, Spain, and Greece. We've done work in multiple crops. We've done work in strawberries, and blueberries, and sunflowers, in tomatoes. And every single trial that we've done, we've had either at worst a neutral effect or at best a positive effect. And it's very unusual. In this industry, it's very unusual to never get a negative result. But we've always seen some combination of better disease control for the crop and better yields. And of course, both those things are critical to a farmer, because at the end of the day, that means they can sell their product at a higher price or more quantity. And if they're able to reduce the amount of conventional chemicals that they're using, they can also save on the chemical pesticides that they're buying.
And what are some of the market factors that are at play right now for your company and for your technology that sort of form a nice confluence of events that make it good for you guys?
So just to put things in context, globally there's a $50 billion, US billion-dollar industry for the use of crop protection products, fungicides, insecticides, herbicides, in pretty much every country around the world. And for a variety of reasons, that industry is coming under a lot of scrutiny and a lot of challenge. There are very strong drivers on farm around increasing productivity, but also beyond the farm. Consumers, regulators, supermarkets want farmers to reduce the amount of chemicals that are being used on the crops. So one of the technologies that has emerged in the last decade or so is the use of biological products. These are all natural organisms or derived from nature in some form that can actually substitute the use of chemicals. So the use of biologicals is an industry that by itself is about a $3 billion segment within that $50 billion crop protection space, but it's growing at about 14–15% per annum at the expense of the use of chemicals. So we're fitting into that space, but then what sets us apart from other biological companies is the fact that we have a second delivery system solution which doesn't use any water either. So it's sustainable in that it has less chemicals, but it's also sustainable that we don't use any water.
Give us the time frame and some of the milestones your company is going to be hitting the next few years as you move into commercialization.
So we're moving away from our R&D phase into the commercialization phase, and we have already had successful demos, large-scale demos with growers in the United States and Florida in particular. So from a grower-centered perspective, the next big milestone for us is revenue. We've already got sales commitments from a handful, from about 6 or 7 growers in Florida, and we expect to be selling our system in Florida under a Florida-only registration in December this year. And then we're expecting full EPA registration in March of next year. That is going to allow us to sell this technology across the United States.
Well, Peak of the Beans is a lifestyle brand. I was fundamentally confused why there wasn't an apparel product that fostered a lifestyle of play for children. I want the world to look at the lifestyle of a child as something that needs to be preserved and protected. And we create an apparel product that makes them feel good. It allows them to get outside and become who they are. And that's what we want. We want to foster a playful life.
Canada's Venture Exchange is often described as a good place for emerging companies to raise money. It's also described by some as a Wild West for its light regulatory touch. There have been some disturbing examples lately for investors when certain stocks ran up on some vague news, only to subsequently crash when that news turned out to be not much at all. Contributor Fabrice Taylor has examined a few of these recent examples, and he joins us now. Fabrice, the Venture Exchange has often been seen as a good place to raise money for miners and other emerging companies, but also as maybe a bit of the Wild West with a light regulatory touch. And the most recent case is this West High Yield Resources, which said that it was going to sell an asset for $750 million, even though it was only worth under $20 million. And then this alleged buyer seemed a bit uncertain, let's put it that way. So you want to pick it up from there?
Uncertain is putting it kindly. He's got a checkered past. He had some run-ins with regulators in, I think, Colorado. 30 seconds of Googling would have told you this. So what happened is he was apparently going to raise this money and buy this asset for $750 million, as you mentioned, whereas the company itself was only worth, again, $20 million. So what they did is the news went out and the stock went to the moon, and then they halted it. So some people bought it thinking it was real. Some people sold it, maybe knowing it wasn't real. In any case, they did halt the stock, and they resumed trading after the company said it's not going to happen. Of course, the stock plummets. Regulators, the exchange was asked to reverse the trades by those particularly who bought that stock, and they refused on the grounds that there was nothing factually incorrect in the news release. Everything they said was true. Because in the news release they said it's highly uncertain and it's not guaranteed and they have to get the funding, it's contingent, all sorts of things. But my problem with that answer is the whole premise was potentially misleading. The whole idea was possibly a lie, maybe probably a lie, because this guy comes out of nowhere with apparently no connections, no resources, and he claimed that he was represented by a certain law firm, and Bloomberg called the law firm and they'd never heard of him, okay? So I don't understand why they wouldn't reverse those trades. I feel sorry for the people who bought the stock. I'd like to know who sold the stock. In any case, I think it's fair to say that the exchange learned a lesson. because when it happened again with this Better You, they saw the news release and they ordered the stock halted before it was allowed to be disseminated. And so at least they're figuring it out. But it doesn't do wonders for the reputation of the venture exchange, especially internationally, because Bloomberg picked up the first story, so it was all over the place. On the second one, this Better You, which has been around for a while, it's a little tech company that's trying to do online training for people. They're claiming that a Hong Kong fund is going to invest $100 million US in the company at $3 US a share. The stock was quoted at 44 cents Canadian. And I can tell you that there's not a person in the world with half a brain who pays $3 US for something that's quoted at 40 cents Canadian. So I'm highly skeptical about this one as well. At least they halted the stock. But it does raise another question, which is, why do this at all? Why does the board of directors allow this news release to go out? Why does the CEO allow it to go out? Why don't you wait until you actually get a binding, committed offer with proof that they have the funds? It's a mystery to me, but there's got to be an answer. It's a lesson for everybody who speculates in these things. If it looks too good to be true, use your head. It's too good to be true. And I don't believe that this Better You financing is going to come about either. I Googled for 5 minutes, and I don't think this Hong Kong fund even exists. There's no sign of it, except for one other news release where they were apparently investing $50 million US into another private company. So I don't think it's going to happen. I did email a director of the company who I know, and he tells me it's going to happen, but we'll see. I have my doubts. And again, if it's too good to be true, if it looks too good to be true, just ignore it. It's just noise.
Another example, something similar, is a company called Slice, and this goes back a couple of years. I remember interviewing an executive with that company. They had technology whereby I could take a photograph of your jacket and it would tell me instantly what brand it was, where I could buy it, and so on. It sounded kind of cool. But they got a takeover offer a couple of years ago for a premium of nearly 500%. So pick up the story there. What happened in that instance?
Yeah, they were developing this technology, but it's very tough. You're competing with Facebook, Google, and all these big players who can invest billions into video recognition. So they were basically on their deathbed. They were finished. They had no cash left. And somebody put out a news release, somebody in Toronto, saying they were going to buy the company for, I think it was 50 cents a share. The stock was at 10. In any case, there was a name on the news release and a number, and I called the guy and I said, so you're going to buy this company for this much money? He said, yep. And I said, do you have the money lined up? He said, no, but I'm going to get it. And he was so brazen about it. They never halted that stock. It went up, traded. Somebody lost money because it went to zero subsequently. The deal, of course, fell apart. And so that was a really bad example of it. So the good news is that the exchanges are catching on, but it's 2017. We've had stock markets for over 100 years. You'd think that they would prevent this. I mean, the exchanges have been known to parse mining news, junior miners news releases and say, you can't say this, you can't say that, or you didn't need to justify this or change that. And yet when somebody says, I'm going to finance you at a 10,000% premium, they don't seem to bat an eye. So the good news is they're catching on. The bad news is that it's a black eye for our markets, in my view.
We have a tagline, and that's like the Desert Line Energy is the next producing lithium mine in the world. Not only at Desert Line Energy, we're ready to meet the demand of the lithium market today by coming into production now. We're also looking out into the future, and we see a bright opportunity for us to be a long-term producer producing lithium chemicals for the growing lithium market today and then into the future.
From the heart of the financial district in downtown Toronto, that's our show for this week. I'm Mark Bunting. Be sure to subscribe to our YouTube channel so you don't miss an episode. And for more great investment ideas through our weekly digest and morning note, subscribe to capitalideasresearch.com. Thanks a lot for watching, and thanks for investing like a pro. We'll see you next time.